The Nightly Business Report.
Good evening. Tonight, the United States has imposed a substantial 44% retaliatory tariff on Sri Lanka, which is anticipated to have a significant negative impact on the nation's export business, especially the clothing sector. According to the Central Bank of Sri Lanka, the country's service sector is expected to propel economic growth in the first quarter of 2025 due to increased demand and sales volumes. With the S&P SL20 index falling 119.30 points to 4,643.32 and the all-share price index falling 349.84 points to 15,657.60, Sri Lanka's stock market ended the day lower. And after President Trump announced hefty tariffs which sparked fears of worldwide trade wars, US stock futures fell precipitously. The S&P 500 and Nasdaq 100 plummeted 2.68% and 3.19% respectively.
From Studio 24, here's Anuradhi Vikramasinghe.
Good evening and thank you for joining us. Sri Lanka faces a hefty 44% reciprocal tariff from the US, a move that is expected to hit the country's export sector hard, particularly the apparel industry. The new tariff policy raises concerns over trade, competitiveness and economic stability.
US President Donald Trump announced sweeping reciprocal tariffs, imposing a 10% baseline tax on all imports and significantly higher rates on countries with which the US has trade deficits. The highest tariff of 49% was placed on Cambodia, while Sri Lanka faces a 44% tariff, the sixth highest globally, potentially impacting its export sector, as 25% of exports go to the US. Trump described the tariff as a declaration of economic independence, claiming they would boost domestic manufacturing by leveling the playing field against foreign competitors. However, many US allies condemned the move, arguing it reverses decades of trade liberalization and could disrupt global markets. Stock markets reacted sharply, with the US stock losing nearly $5 trillion in value since mid-February, amidst investor concerns over economic repercussions. Economists warned the tariffs could raise consumer prices, slow global growth, and increase recession risks.
Trump's new tariffs aim to reduce the U.S. trade deficit by imposing a 10% baseline tax on all imports and higher rates on key trading partners. Sri Lanka, facing a 44% tariff, risks major export losses, particularly in apparel. For further insights on this, we speak with global business cycle economist Dr. Kenneth De Silva.
So Sri Lanka exports about $3 billion to the US, and out of those $3 billion, bulk of it is by way of apparel exports. Now, if you look at the apparel sector plays a key role in the economy of Sri Lanka, given that about 700,000 jobs, both direct and indirect, rely on this sector. Therefore, the tariffs have a high risk probability that it will affect this sector, given that the current tariff structure on average for cotton-based apparel exports is around 15%. We assume that these tariffs that will come into effect from today would be at the higher end of the scale, which is at 44%, which the US President indicated in his announcement to the world will come into play for the apparel sector. So therefore, the risk factor remains significant for the apparel sector and to the country at large, given that the apparel sector has a significant contribution to the overall export receivables of the country.
Sri Lanka's service sector is set to drive economic growth in the first quarter of this year, with rising demand and sales volumes, according to the Central Bank of Sri Lanka. The positive outlook highlights the sector's key role in the country's economic recovery.
Sri Lanka's service sector is expected to drive economic growth in the first quarter of this year, following its strong performance in the previous quarter, according to the Central Bank of Sri Lanka. The Business Condition Index, which reached a double-decade high of 128 points in the fourth quarter last year, is projected to slightly dip to 123 points in the first quarter this year, reflecting continued economic momentum. Demand and sale volumes are anticipated to grow on a year-on-year basis, primarily driven by expansion of the industry and services sector, while agriculture sector is expected to remain subdued. Capacity utilization is likely to improve during the same period as businesses respond to increase in demand. Investment sentiment is also strengthening, with the investment index forecasted to rise to 130 points in the first quarter this year as firms focus on expansion initiatives. The availability of skilled labor is expected to improve marginally, particularly in the services sector, following a similar trend from the fourth quarter last year.
Sri Lanka's President Anurakumar Dissanayake has appointed a committee to assess the impact of the new US tariff system and provide recommendations to the government. The move comes in response to reciprocal tariffs imposed by President Trump, which could affect Sri Lanka's trade and economy. The committee includes key economic and industry leaders such as Presidential Economic Advisor Duminda Hulangamua, Ceylon Chamber of Commerce's Sharon Fernando, and top executives from Brandix, Mars and Lanka Garments. High-ranking officials, including the Finance Minister Secretary, Central Bank Governor and Export Development Board Chairman, are also part of the panel. Their task is to analyze potential challenges posed by the tariffs and propose strategies to mitigate any negative effects. The initiative reflects Sri Lanka's proactive approach in safeguarding its economic interests amid shifting global trade policies. Sri Lanka is setting its sights on becoming a top global destination for high-profile weddings, aiming to host 20 to 25 luxury ceremonies each year. The initiative is expected to generate an estimated annual revenue of $6.25 million, bolstering the country's tourism and hospitality industries.
Sri Lanka is aiming to become a top luxury wedding destination, targeting 20 to 25 high-profile ceremonies annually and $6.25 million in revenue. A stakeholder meeting led by the Foreign Affairs Ministry discussed strategies and streamline destination weddings and boost tourism. Industry leaders addressed challenges like permit delays and custom procedures, proposing solutions such as dedicated immigration counters and a national wedding steering committee. Tourism Minister Vijitha Herath stressed the need for government collaboration, while Deputy Minister Professor Ruwan Ranasinghe highlighted public-private partnerships to enhance operations. Officials emphasized Sri Lanka's cultural and natural appeal for weddings, with Tourism Bureau Chairman Buddhika Hewawasam promoting the country's versatility in hosting diverse wedding themes. The initiative is seen as a key driver for increasing luxury tourism, offering couples an unforgettable destination for their special day. With robust support from the government and industry stakeholders, Sri Lanka is poised to capture a growing share of the global wedding market.
Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Sri Lanka's stock market closed lower today, with the all-share price index dropping 349.84 points to 15,657.60, while the S&P SL20 index fell 119.30 points to 4,643.32. Trading volume reached 123.8 million shares with a turnover of 3.83 billion rupees. For further insights, we speak with Akna Tennakun from First Capital Holdings.
Thank you, Anuradhi. Today, the market saw a substantial downturn, and we can attribute this largely to the finer details of US's new reciprocal tariff scheme under President Trump being announced. The ASPI underwent a massive drop during the early hours of today's trading session, driven by panic selling of export-oriented stocks, particularly by retail investors. We also saw some visible selling pressure on banking sector counters. So the ASPI showed signs of a mild recovery towards midday, but dwindled again amid palpable volatility. All in all, the index ended the day in the red at 15,658, having registered a drop of nearly 350 points. Commercial Bank, Haley's, Melster Corp, HNB and Sampath Bank were the top negative contributors to the ASPI. Today, the turnover levels were high, prompted by greater volumes. At the end of the session, turnover stood at 3.8 billion rupees, significantly higher than yesterday's 2.3 billion level. The capital goods sector was the top contributor to today's turnover with a share of about 29%. This was followed by the banking sector and the food, beverage and tobacco sector, which produced a joint contribution of about 42%. Thank you.
Sri Lanka's 44% US tariff threatens exports, especially apparel, raising concerns over trade competitiveness and economic stability. The move could impact jobs and foreign earnings, pressuring the country's economy. Policymakers may need urgent strategies to counteract these potential losses. For further insights on this, we speak with Ranjan Ranatunga from First Capital Holdings.
Thank you, Anuradhi. On Wednesday, 2nd of April 2025, the US President Donald Trump announced a sweeping set of reciprocal tariffs, imposing a baseline tariff of 10% on all imports, while a significant higher tariff rate of tariff was imposed on dozen other countries, which US run trade deficits. This resulted with Sri Lanka facing the sixth highest the tariff in the world, with about 44%. Sri Lanka currently sends about 23% of Sri Lanka's total merchandise exports to US, amounting total of $2.9 billion for 2024. The textile and apparel sector stood out as the largest contributor for exports, closing in almost 70% of total exports. This also other products in exports from Sri Lanka included rubber products, chemicals, as well as plastics. The imposition of these tariffs is likely to diminish US consumer demand for imported goods, adversely affecting Sri Lankan exports. Moreover, retaliatory tariff measures from other US trading partners could also adversely affect the global economy, resulting in slowdown in GDP growth. Moreover, a possible decline in exports can possibly lead to increased trade deficit and a possible depreciation of the Sri Lankan rupee as well. The imposition of the taxes in the US is also expected to adversely affect the listed corporates in Sri Lanka, which exports predominantly sends to US. Among these, companies operating in the apparel sector, namely TJ Lanka, Hella Clothing and Haley's Fabric, are expected to negatively impacted from these tariffs. However, with the expectation of rupee depreciation, the impact that will be coming into these corporates is expected to be offset or minimized with the impact that is coming in from possible drop in sales due to imposition of tariffs. Thank you.
Gold prices steadied today after briefly hitting a record high of $3,167.57 per ounce as investors sought safe haven assets following US President Donald Trump's sweeping import tariffs. Spot gold traded at $3,130.21 amid some profit taking, while US gold futures slipped 0.4% to $3,154.10. The metal has surged 19% in 2025, continuing last year's rally driven by economic uncertainty, geopolitical tensions and strong central bank purchases. Increased investments in gold-backed exchange-traded funds have also contributed to the price surge. Despite today's pause, analysts expect gold to remain well supported as market volatility and global risks persist. Oil prices tumbled in Asian trade today amid growing fears of a global economic slowdown following US President Donald Trump's sweeping trade tariffs. Brent crude futures for June dropped 2.5% to $73.11 per barrel, while West Texas Intermediate crude slid 2.7% to $69.30. Both benchmarks had fallen as much as 3% earlier in the session. The decline comes as oil markets struggle to sustain a recent rebound from multi-year lows, with geopolitical tensions in the Middle East and Russia-Ukraine conflict offering only a limited risk premium. Investors are also eyeing a key OPEC Plus meeting later today, where the group is expected to outline plans for increased production. Any decision to boost supply could further weigh on prices in the coming weeks. The Sri Lankan rupee weakened slightly against the US dollar today, with the buying rate increasing marginally, according to the central bank. While the rupee depreciated against most foreign currencies, it did appreciate against key Gulf currencies. Let's take a closer look at today's exchange rates. Short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. MoneyGram and MasterCard have partnered to enhance digital money movement, enabling faster and more secure cross-border transactions. Through MasterCard Move, MoneyGram customers using US-issued MasterCard cards can send funds to 38 eligible receiving markets, with further expansion expected this year. The collaboration enhances financial accessibility by offering near real-time transfers to bank accounts, mobile wallets, MasterCard cards, and cash pickup locations. Customers will benefit from cost-effective, secure and efficient transactions backed by the trusted MoneyGram and MasterCard networks. MoneyGram CEO Anthony Suhu emphasized the company's commitment to expanding financial access through strategic partnerships, leveraging its vast global network. MasterCard's co-president for the US, Chiro Ikert, highlighted the importance of secure and efficient money transfers in driving participation in the digital economy. Arpico Insurance PLC has appointed Rohan Muttaya to its board of directors, bringing his extensive experience in banking, technology and cybersecurity to the company. Muttaya has held leadership positions at major financial institutions, including NDB Bank, Cargill's Bank and Commercial Bank of Ceylon. His appointment is expected to drive technological innovation and digital transformation within Arpico Insurance. Chairman Ramal Singh expressed confidence in Muttaya's ability to enhance the company's market presence and security initiatives. Muttaya has been instrumental in pioneering Sri Lanka's first banking payment hub and advancing mobile banking technology. He has also contributed to national cybersecurity policies and represented Sri Lanka in international forums on cybercrime. ACL Cables PLC, Sri Lanka's leading cable manufacturer, has announced key board appointments, reinforcing its commitment to strong governance and strategic growth. Emeritus Professor Malik Ranasinghe has been appointed as an independent non-executive director and senior independent director, while Kusal Jayawardena joins as an independent non-executive director. Professor Ranasinghe, a former vice-chancellor of the University of Moratuwa, brings extensive experience in engineering, corporate governance and academia. Jayawardena, with over 25 years in capital markets and financial services, currently serves as Deputy Managing Director at Allianz Finance Co. PLC. These leadership changes align with ACL Cable PLC's vision to enhance governance, drive innovation and sustain its industry leadership. DFCC Bank has partnered with Orion Stellar to enhance its digital infrastructure, ensuring secure and seamless banking experiences for customers. Orion Stellar, with top-tier security certifications, will help DFCC Bank meet stringent financial regulations while supporting its digital transformation initiatives. The collaboration aligns with DFCC Bank's commitment to sustainability, as Orion Stellar's energy-efficient data center design promotes eco-friendly technology and responsible business practices. By leveraging Orion Stellar's fully managed data center, DFCC Bank eliminates the operational complexities and costs of maintaining an in-house facility. DFCC Bank's Senior Vice President and CIO, Vindhya Solangarachi, emphasized that this partnership enhances security, efficiency and sustainability in digital banking services. This initiative marks another step in DFCC Bank's digital evolution, reinforcing its leadership in sustainable banking and strengthening Sri Lanka's digital infrastructure. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stocks tumbled as markets reacted to US President Donald Trump's sweeping 10% tariffs on most imports, with Japan leading the declines. Japan's Nikkei index hit an 8-month low, while Hong Kong's Hang Seng index plunged 1.8%. China's Shanghai Composite dipped 0.2%, and the CSI 300 index lost 0.4%, despite data showing stronger than expected growth in the country's services sector. Australia's S&P ASX 200 fell 1.1% after trade balance data revealed exports had dropped to a 4-year low. Other regional markets followed suit, with South Korea's Kospi down 1.2% and the Philippines' PSEI Composite falling 1%. India's Nifty 50 futures also edged 0.2% lower, reflecting cautious sentiment across Asian markets. U.S. stock futures plummeted after President Trump announced sweeping tariffs, raising concerns of a global trade war. Dow futures fell 828 points, while the S&P 500 and Nasdaq 100 dropped 2.68% and 3.19% respectively. Major multinational stocks like Apple and Nike slid 7%, while retailers and tech giants also suffered steep declines.
U.S. stock indexes rebounded to close higher on Wednesday, ahead of President Trump's tariff announcements, with the Dow adding more than 0.5%, the S&P 500 gaining almost 0.7%, and the Nasdaq climbing nearly 0.9%. Trump, after the trading session, announced a 10% baseline tariff on all imports and higher duties for many of the country's biggest trading partners, ratcheting up a trade war he kicked off upon his White House return. Stock index futures moved lower after the announcement, indicating investors expect losses when Wall Street opens on Thursday, while gold rose. Economists say Trump's tariffs could boost inflation and also slow the economy. During his remarks, traders boosted bets the Federal Reserve will start cutting interest rates in June and deliver a total of 0.75-point reductions by October. Stocks on the move Wednesday included Elon Musk's Tesla, which closed up more than 5% but tumbled over 4% during Trump's remarks. And shares of Amazon gained 2% after it was reported the company was bidding for TikTok, though the stock was down 3% after the tariff remarks. Focus now shifts to the crucial monthly non-farm payrolls report, as well as a speech from Fed Chair Jerome Powell on Friday.
Tesla's first quarter deliveries fell 13%, hurt by backlash against CEO Elon Musk's political stance, rising competition and its aging lineup of electric vehicles, sending its shares down in pre-market trading.
Tesla sales hit a major bump in the road as first quarter deliveries fell 13%. That's according to figures released Wednesday. The electric vehicle giant was hurt by a backlash against CEO Elon Musk's political stance, and it was also hit by rising competition and its aging lineup of electric vehicles. Tesla delivered 336,681 vehicles in the first quarter, well below analyst expectations. That was down from close to 387,000 a year ago. Musk had pledged a return to growth after Tesla's annual deliveries dipped last year. But his advisory role to US President Donald Trump has led to discontent among some customers. Musk has been instrumental in firing thousands of federal workers and cutting humanitarian aid. Protests at Tesla stores in the US and Europe have spiked, and Tesla cars have been vandalized. Some data also points to a rise in Tesla owners trading in their vehicles. Investors are waiting to see if refreshed models like the Model Y and incentives have helped counter weak demand and tough competition from Chinese and European rivals. A trade body said China's BYD could overtake Tesla as the top global EV seller for the first time this year, with a 15.7% market share.
Well, that's all from us here on the Nightly Business Report for today. We'll see you again tomorrow with the latest updates across the business globe. Till then, I'm Anuradha Vikramasinghe. Thank you very much for watching. Have a good night.